Hey everybody, welcome to our key levels for Forex daily technicals for 11/20/13. As always, trading foreign exchange or margin carries a high level risk, may not be suitable for all investors. I ask you to read the disclaimer very carefully, to understand the research in trading margin, and seek advice from an independent financial advisor if you have any doubts. Well, before we can even get started in Asia, we had a big pop in all the anti-dollars, all the high beta currencies kind of popped out here pre-Asia, mainly because the release of Ben Bernanke's notes or the speech, which he's about to give in about an hour, were released, and he was relatively dovish. He basically communicated the fact that the Fed is going to stay accommodative for as long as the eye can see, and they're kind of shifting now towards a more nuanced format where they're communicating the fact that even if they do taper the QE, they're not going to raise interest rates until the unemployment rate dips all the way down below 6.5%. So they're kind of moving the goalposts here. That's having a little bit of a anti-dollar knee-jerk reaction here in early Asia. We'll see if it can last, but certainly euro has traded pretty well most of the North American afternoon, and we take out the 35.50 levels. So the run towards the 3600 really becomes quite pivotal, and that in turn, by the way, also puts the euro yen, which we've been talking about for the last couple of days here, all the way out to fresh yearly highs. The breakout above 135.50s, again, that puts it on a 36 track as well. If Asia comes in and begins to kind of buy the anti-dollars as the night progresses, so already we have a lot of commotion before Tokyo even comes online. We'll see if we can get some continuation and continuity in that particular trade as the night progresses. You can see that cable is acting relatively well as well. It traded now to today's highs, but what cable is really facing is the 61.50 resistance level, which is a key resist level. He needs to overcome that level, just as Aussie is facing a very key 94.50 resist level over here. So both of them are at just sort of pivotal points here, and if they can run those stops across the 50 mark, I think you have a chance here. Certainly to run it all the way towards 95s on the Aussie and test the pound to 62s, all on this premise that, of course, U.S. monetary policy is going to stay accommodated for quite a long time, that Yellen is going to pretty much follow Bernanke's path, and Bernanke remains unabashedly dovish, as he should be. But the point being is that this is definitely putting the pressure down on the buck. Although what's interesting is it's putting pressure on the dollar, but not necessarily against the yen, which has its own very heavy accommodative policy. And one of the things that we've seen over the last week and a half is this incredible divergence between I'm trying to sort of put it properly, U.S. monetary rhetoric and the performance of dollar yen, and even the performance of U.S. bonds and U.S. yields and the performance of dollar yen. Dollar yen has become far more correlated to equity market performance than anything else. So on the assumption that QE infinity is a relatively bullish value for equities, and that this may help lift the Nikkei as we go into the North America, into the Asian session, there is potential here for dollar yen to continue to remain bid. Dollar yen, the key levels here is 24.25 initially on the day's highs, but really the big level is the 150. If we can approach anywhere near there, that's going to really create, I think, a very powerful move across all the yen crosses, which are clearly strongly supported now. So taking a look back at pound yen now is coming back towards the yearly highs here at 61.50, 61.60, angling its way towards 62. Aussie yen is also starting to recover quite well, and looking to target now 95. And Kiwi yen, which is a trade that we like a lot, also looks quite good here, trying to take out the 84s. So very pivotal levels on the yen crosses here that, given a combination of a relatively dormant dollar yen, or perhaps even a surging dollar yen and surging euro, surging pound against it, you could get a pretty powerful combination. I still think it's going to be the yen crosses game to win or lose tonight, depending on how the markets react to all the news flow that we have. Going into the rest of the day, we have obviously BOE minutes, not really a significant factor, I think, after the UK inflation report. Then we have U.S. retail sales, which would be important to take a look at, just simply in a sense of how well or how poorly the U.S. economy is doing, given the given the positionality of U.S. monetary policy. And more importantly, then we also have the FOMC minutes, which will be interesting to see simply if there's any kind of discussion of tapering, if there's any kind of discussion of exit strategy, which will be positive to the U.S. dollar, or whether pretty much everyone there wanted to stay relatively accommodated for the time being. That will be a very key tell all the way later in North American session. But for now, it's really all about the risk rally. It's about Nikkei. It's about the yen crosses, and it's about the dollar getting further battered by the dovish comments of Bernanke to see if we can take out the key levels here to the top side, both in the yen crosses and in the majors themselves, with the euro dollar now looking towards the 36, obviously, with cable looking towards the 62s, and with Aussie looking to take out the 94.50s towards the much larger resist level at 95s. That's pretty much how the game shapes up for the night. Wishing you guys the best of luck, the best of trading. Boris Schlossberg over and out.